joining us on our social media platforms. Thank you, everyone, for joining us on the mainstream radio station. And also, thank you to our lovely co-host, Stephanie. And how are you doing this morning?
Morning, Munyumba. I'm fine. How are you?
I'm fine, thanks. And let's get kicked off into today's Finance Tuesday. It is at this point now where we now start looking at money and finance, how we start looking at personal things. We go into the four money skills today. Remember, today we're always dealing with things like make money, manage money, multiply money, and maintain your money. So today we'll be talking more about the make money equation. And the conversation today will be about something called building and accumulating your career capital. It's very important because that's what gives you the leverage to get the career that you want. And this comes from a book by Cal Newport. But let's get into today's conversation. We get back to the numbers. Yesterday, we did see the FX rate drop, push back again, down 0.3%. The dollar has gotten stronger again. And we've seen that this has been a domestic dollar rally that has continued moving. Dollar is up 6.17% on the 30 days, up 1.64% on the week, and up 16.4% year to date. Dollar is still on a strong buying spree. What we also are seeing is that the Lusaka All Share Index did move up. Sorry, there was a little bit of a glitch here. The All Share Index did exhibit some upward movement of about 0.41% yesterday. Mainly due to 0.47%. We just have a glitch here on our screen. Yesterday, mainly due to a movement upwards mainly due to a movement upwards in Zanaco shares and Puma Energy shares. Zanaco has actually officially become the fourth company in Zambia to have a market capitalization that exceeds 5 billion kwacha. Just to show you how much of a landmark that is, before 2020, we only had one company that had a market capitalization above 5 billion kwacha. Now Zambia has four companies listed on the Lusaka Stock Exchange that have a market capitalization of 5 billion kwacha or more. Zanaco moved up yesterday by 4% after impressive results that did show profit growth and revenue growth, top line growth, bottom line growth, and also mainly driven by securities trading, but also mainly growth in deposits and loans. So we did see that Zambia's biggest bank is continuing to get bigger. And so as we continue now, we are seeing that the All Share Index is actually moving up with it. Remember that there are about 10 stocks that move the All Share Index. We call those the billion kwacha stocks. They make up about 90% of the market capitalization ex ShopRite. Now, we also did see that the bond index moved up yesterday as well. Bonds yesterday also moved up by about 0.06%, down 0.34% in dollars, and you're seeing the composite yield are down by 0.03%. So we also did see that the rand moved up by 0.3% yesterday, up 5.24% year to date, and up 2.85%. So there is increasing inflationary pressure that's actually pushing up the exchange rate against the rand, which will actually end up reflecting against what is happening in people's pockets, because we import a lot of our consumer goods through and from South Africa. Things like our beef, things like our cleaning products, things like our household goods. If you look at a lot of your household goods in your house, it's going to say two places: made in India, made in South Africa. Maybe some of it is made in China, but the majority of the things you're utilizing in your house, the things you are drinking, using things, if it isn't made in Zambia, it's made in South Africa or India. So when we see the rand moving up like this, it puts up a bit of pressure against the household. Also, we do see that the GRZ bond index up 0.6%, up 19.99%, basically up 20% year to date. We're waiting for inflation data, which should be coming in the day after tomorrow, the day before the budget, and the day, Stephanie, of Money FM's fifth birthday. Always remember that we are turning 5 on Thursday. To all of us here, I personally, Stephanie, would have also been here for 5 years, but that's another story. Other news that we also did see is that the US, the GRZ bond index in dollars is only up 3.92% year to date, down 0.34% because of the strength of the kwacha. And we're also seeing that interest rates are still at 24.57%, moved down by 0.03%. We also did see that the commodities board, we are seeing that copper is down 0.85% on weak news coming out of China, continuous weak news coming out of China and the global economy. We did see, and also the fear of interest rates going up. We also did see that oil finally dropped down after pushing up to 93, 94, down to about 1.4, down by 1.4%. as of yesterday, but still on the week down 2.58%. And gold is down 0.54%, obviously, as we're waiting Federal Reserve data to try and see if they're going to push up interest rates. As Federal Reserve Chair Jerome Powell did say, he's expecting rates to be higher for longer. What are we expecting the pump price to be right now? This is where our expectation sits, up 12.16%. Zambians should expect 33 kwacha at the petrol pump at the end of this month, going into the beginning of next month. Expect 33 kwacha or more at the petrol pump, mainly due to global Brent prices moving up by 8.15%. Dollars getting 6.63% more expensive. And by the way, you should expect this to actually even be higher than 33 kwacha, mainly because we haven't even taken into consideration supply chain factors. How much will those impact the price? And I think there have been warnings that are starting to get issued that the world is going to experience elevated oil prices, mainly due to what is happening in Russia, also what is happening Saudi Arabia and Russia. Now, we also did see that wealth insurance assets, we did see Bitcoin down 0.6%, while we saw Ethereum up, up 0.3%, and gold and kwacha down 0.24%. Now, across the market, we are seeing that Bitcoin is up 84.7%, Ethereum up 54.54, gold up 23.3, stock markets are actually up 26.64. Sorry, that was yesterday's number. Bonds up 20%, and USD up 16.4%. So we are seeing across market performance above inflation. So we are seeing at least 10% above inflation or 9.4% above inflation on bonds, while stock market is performing at about 16.4% above inflation year to date. And this is not even including the dividends that have been earned by people investing in the market. So you can see that there actually has been positive performance. Even with a slow economy, there actually still has been positive performance in the mainstream assets. The volatile ones, which are gold, dollars, Bitcoin, they've all strongly performed, but this quarter, some of them have been dragged back. So if you take a look at the quarter performance, stock market's up 12.1%. Versus 5.1% in the previous quarter. Bonds are up 5.9% versus 7.6%. Looks like bonds are going to close this quarter weaker than they did with a lower performance than they did in the previous quarter. USD is up 19% versus reversing the losses of 17.5% in the previous quarter. Gold up 20%, reversing the losses of 19.2%. While we're seeing Bitcoin, which has not reversed its losses, it's still in a net loss position since the second quarter. And Ethereum is starting to compound its losses from the second quarter. So we are seeing some sort of negative activity happening across the market. Other news that we're seeing as well is in terms of the four horsemen. Spanish PPI came out yesterday, 10% deflation, showing that there are tailwinds pushing inflation down. However, interest rates are still high in America. 3-month bills at 5.33%. 5.33% interest and 5.32%. Remember, these form the floor as to what Zambia should be expecting for its interest rates when they add risk on top of that. So remember, until these interest rates come down, it's also difficult to expect our interest rates to start coming down because Americans will not give you less than what they're giving their own government. German business expectations rose only so slightly, showing that there has been some sort of industrial improvement. Stephanie, that rounds up a large quantum of the show of the market itself. Now, in the deep dives, first one I will touch on from yesterday. As I pointed out, Zanaco becomes the fifth company and the fourth company on the stock exchange to register a 5 billion kwacha market capitalization, which means that the value of the company has exceeded 5 billion kwacha on the stock market. That's what we mean when we say market capitalization. Total value of all the shares multiplied by the share price was a 4% movement that moves Zanaco up from 4.97 billion kwacha worth of market capitalization to about 5.2 billion kwacha worth of market capitalization. Now, in terms of that, the other companies that have got a 5 billion kwacha market capitalization and above are Zambia Sugar, which has a 5.7 billion kwacha market capitalization, ZCCM, which is about a 6.7 billion kwacha market capitalization, and Copperbelt Energy Corporation, which was the first stock ever to cross over 10 billion kwacha in value. So already we actually now have four companies where we only used to have one, that was ZCCM. ZCCM at one point was the only company that had a market capitalization, in other words, a full company value of over 5 billion kwacha. Now we have four. So it shows you the broadening and expansion of the market, especially these main industrial stocks And these are mainly stocks, obviously, in industrial. Zanaco becomes the first in the service part of the economy to actually do that. So remember, Zambia Sugar is a sugar producer, CEC electricity producer, ZCCM represents the mining sector, while Zanaco becomes the first one in the banking sector to cross over that, and it's way above all its other competitors, unfortunately, in the banking sector. So this is actually becoming a bit of a leviathan inside the banking sector, obviously, with its number 2 on its heels. So we're going to be doing banking industry breakdowns as we go along. So that's the first major story that we have. We now have a fourth company that has crossed over the 4 billion kwacha mark. In Africa-wide news, we have heard that employers and workers, and thank you to our Money FM team for this story, employers and workers in Kenya have vowed to fight a proposed unemployment insurance authority bill. The proposed law seeks to have a 3% salary deduction to fund a short-term monthly stipend for employees who lose their jobs for reasons not of their making, such as redundancies, and also such as redundancies, and also maybe things like the pandemic kicking in. So they're trying to push for, America has this, by the way, unemployment insurance. Should you lose your job, you can actually go on, they call it jobless claims. You'll see that I always talk about something called jobless claims in America. So if you're jobless, everyone contributes 2% to this macro fund in America, which gives people about $600 a week, which they can live off so that they can have the comfort to go and look for a job. It's a very short-term thing. You have to actively prove that you're looking for a job. So in other words, when they tell you there's a job here, here, and here, you have to pitch up, you have to go for the interviews. So there actually is unemployment insurance in some of the developed countries. But the problem, here's the difference, Stephanie. Here's the reason why it works in developed countries. The majority of the population work. That is the difference between an African country and America. The majority of the American population are working people. Okay, formally employed working people. Do you know out of the almost over 200 million working people in America, Stephanie, take a guess what percentage of them are on unemployment insurance? Take a guess.
I would say 5 out of 10.
5 out of 10. Half of them. You see, that's what would happen in Zambia if we introduce unemployment insurance. Actually, 1%, less than 1% of Americans are on unemployment insurance. So already it tells you that it's not a very popular thing that they use. So that's why it's sustainable. You bring unemployment insurance to Zambia, and 90% of the country will be using it. Okay, that's the problem. So that thing will go bankrupt this fast. That's where the problem comes. So you can only have it in countries where you have finally solved the unemployment problem by employing the majority of your population. As much as Americans complain, the majority of their population are employed. Majority of them are working. Okay, about 36 million of them are entrepreneurs, small business owners. A couple of million of them are bigger employers. The majority of them, about 160 million or 80 million of them, 180 million of them are working full time. So I think that's the reason why they can afford to have it. Kenya is trying to introduce it, and I wonder if it's going to be sustainable. The deductions are triple the 1% that was proposed by the Treasury post-COVID blueprint and the Labor Ministry at the height of the pandemic shock in 2020. So they're not really happy about an extra 3% being deducted. Oil prices settle near flat in choppy trading as Russia eases the fuel ban. So this is some good news. This is why our expectation of fuel moved from 33.01 to 33 kwacha. We've now finally found some sort of resistance. Russia approved changes to its fuel ban, lifting restrictions on fuel used as bunkering for some vessels and diesel with high sulfur content. The export ban on all other types of gasoline and high quality diesel still stands. Okay, so they are moving high sulfur diesel out of the ban, so they're adjusting it. Also, the other problem that's also pushing oil prices down is a hawkish Federal Reserve that is rattled by financial markets and concerned that interest rates are going to be higher for longer. And also, but however, one of the opposing factors is the number of operating oil rigs in America fell by 8 to 507. So in other words, places where there's extractions of oil by the Briggs survey to the lowest that it's been since February 2022. So we are still having oil problems. Oil supply in America is still weak. So there is some upward pressure that will still push towards oil prices. That's some of the data that we're seeing as well. And finally, to close out the big news for today's show, for today's news section, we have seen that China's Evergrande Group, long pending debt restructuring plan has rekindled fears of China's crisis hit property sector. Developer China Oceanwide Holdings added to investors' concern in an exchange filing, which said a Bermuda court has ordered its winding up and appointed a joint provisional liquidator. China's property sector, which accounts for roughly a quarter of its economy, on the back of Beijing support measures and two other major developers forging debt deals with creditors. So in other words, they're trying to figure out how to get through this Evergrande situation, and it's causing a lot of problems. This is going to reflect in the copper price and is going to continue to show continuing weakness in copper prices going forward. And today, just like that, we get into our topic of discussion. I don't know if I've got my co-host here, Stephanie. The question I would like to throw out to our audience today is, what is the essential attribute that employers and clients most value employers and clients most value in your industry? Sorry, I forgot to write that. What do you call the most what is the most essential attribute of you and your work that employers and clients most value? Now, this is important to know that, because today we're going to be talking about building career capital according to Professor Cal Newport's work. Stephanie, I don't know if you're there. I wanted to see if I could toss that question to you. Okay, and we will leave that there, but I will keep that going. What is the most essential attribute in your field that employers and clients most value? If you got an answer to that, please call us. Have no problem calling us. Call us in on Money FM's line, and also text us here in the comment section. What do you think is the most essential attribute in your field that employers and clients most value? So today we're going to be talking about building career capital, and where does this conversation come from? Well, usually we've seen that everybody wants to build some sort of significant wealth in their career. We do want to build some sort of significant wealth in our career, and as a result, we often take shortcuts. We often try and start buying luxury things without actually having earned that money, or we try and borrow heavily for lifestyles that we cannot afford, or we try and fast track our growth or our wealth by investing in things that promise us higher than above returns. Really, a lot of this, by the way, Stephanie, reflects in an income problem. Often people struggle to be able to leverage their skills. So in a book written, Be So Good They Cannot Ignore You, Professor Cal Newport actually talks about, and that time he was a computer science student trying to become an adjunct professor, but he was talking about actually building yourself in your area, building yourself in an area of proficiency. And he talks about the terminology, how he talks about the whole follow your passion. Now, this is the main thing that everyone always took away from this, but it was actually a deeper book called Be So Good They Cannot Ignore You. Here he is talking about it at Google Talks, where he's now talking about the follow your passion advice. He's going to talk about deliberate practice, and he's going to talk about mentorship and imitation. So I'm going to first go into the conversation about following your passion, about why he kind of pushes against that and says, you need to be able to build your proficiency. I think that
follow your passion objectively. We see that it's a sort of astonishingly appealing concept. The problem is that follow your passion, in addition to being astonishingly appealing, also happens to be astonishingly bad advice. If your goal is to end up passionate about what you do for a living. Follow your passion, first of all, claims that most of us have pre-existing passions we can follow. In order to follow a passion, everyone has to have my passion. Follow your passion relies on this idea that we have pre-existing passions that for some reason are well suited to a modern knowledge work economy, and that we just have to identify those. We don't have evidence that that's the case. It doesn't match the stories we find in reality, and we don't have a lot of support for it. What are people doing that do end up loving what they do? I did find a pattern that shows up pretty often. The specifics of the work is not what's important. There's almost always some general lifestyle traits. Maybe you want autonomy, power and respect, and impact, creative. This is what matters.
So that was part of it, where he said, look, the main things that actually make people passionate about their careers are not the actual job itself. It's attributes of the job. They allow you to express your creativity. They give you control over your hours. They give you flexibility. They give you autonomy. They give you freedom. There's a lot of freedom in the way you can do your work, and you are well compensated for it. So this combination of things, he's saying that a lot of you people are lacking leverage to be able to do that. So I'm going to go through different things he talks about in this on how you can actually build this. So let's start with the conversation of what is career capital. So career capital is a set of rare and valuable skills, so a set of skills that are both rare and valuable that can be used to leverage and define your career. So if you are very good at something and you are very hard to lose, if your employer turns around and says, if I lose you, I potentially lose my effectiveness, I potentially lose my office morale, I lose team management. If I lose you, I'm going to go through a negative period. That's what your employer has to be able to say, or your client has to be able to say that in order to justify paying you a higher price. So in other words, a higher salary or a higher premium for what it is you do. Okay. And also agreeing to your terms. Because certain people, I've seen people complain about this. How come such and such can work from home more than they want? How come such and such is not yelled at when maybe they don't have to work extra hours? Because such and such has actually built career capital. They didn't focus on just accumulating money. They're focused on accumulating a negotiable stance, leverage. A lot of people fail to build leverage by actually looking at what it is their career is. And it also helps with navigating good career decisions. Why this is important, remember, is that there are 4 parts to your money skills. So let's backtrack a bit as to why I'm talking about things like career capital. In order for you to build a set of financial assets, you must have an inflow of money coming in. You actually have to have money flowing in order to allocate that money into bonds, stocks, properties, and various other things that can generate passive income. So in order to be able to do that, so one of the things you have to also be doing is constantly be aggressive about how much money is flowing in and under what terms and circumstances that money is flowing in. So in other words, people who are very passionate about their work have got specific attributes. That's what Professor Cal Newport points out. So you have to make money, then manage the money you make, then multiply the money you have managed well. And then in order to be able to maintain it and turn it into wealth. So there are 4 money skills. So if anybody can write those down, I'd really appreciate that I know that you're listening here. The 4 money skills are make money, manage money, multiply money, maintain money. Those are 4 core money skills that we have to be able to build. If you're looking at, the problem is that we often don't know where our problem is. I will do consultation with people and I'll tell them, you're not at an asset problem yet. You're at a make money problem. So it's time to go and train yourself in maybe sales, maybe service, maybe problem solving. Train yourself to be able to solve a problem, sell a product, or serve a person. These are the 3 areas. Now, in what field, that's up to you. That's up to your knowledge area, your interest area. Those are areas that he talks about. But he's saying that if you want to build a career that you're passionate about, then you need to build leverage so that people agree to certain terms that allow you to, 1, express your creativity, 2, have autonomy, and 3, have flexibility and freedom. Okay, so these are things you need inside your career, as well as being compensated correctly for you to be passionate about it. Right. So the first thing I'll look at is obviously it's a set of skills. Now, these are also the factors you can leverage to give your career more creativity, impact. Sorry, I've also forgot about that. Impact, control, and autonomy. Now, the concept was created by Del Filippi and Arthur in 1994, but it was popularized by Professor Cal Newport in his book, Be So Good They Cannot Ignore You. And so these are the things that we all have to look for. By the way, this is also what made me pivot and look at the skill set that I had built over a period of time. I looked at what people were calling me for, and then I decided that may be the right area to start a business in, as opposed to these areas I'm just interested in. Okay, I actually looked at where I have leverage more than what I enjoy looking at a lot. Sometimes I realized I may not be a passionate entrepreneur in an area. I could just be a passionate fan of certain things, and I may have confused that. Passion, by the way, can also be in your consumption. So don't be careful not to confuse your consumptive passion with your productive passion. Now, in terms of the components of career capital, this is broken down by another theorist that said, and this is even Del Filippi as well. They broke it down and said career capital is broken into 3 areas: know why, know how, know whom. In other words, your human capital, your cultural capital, and your social capital. So let's break these 3 down. One, knowing why gives you awareness and confidence in what you do. So if you know why you're doing it, do you have an intent, a purpose, an impact? Do you feel impactful about what you are doing? This is why I always say that the passion side is actually very strongly driven to the impact that your work has on your society or your field, more than it is the enjoyment you derive directly from it. And the motivation, it also gives you intrinsic motivation to know that you're making an impact. So knowing why you're doing something does build intrinsic motivation. The second part also has to do with flexible skill. Are you flexible and adaptable with your skill? Also, have you gained experience and knowledge? So that's your know-how. And have you done deliberate practice? In other words, have you been upgrading and improving your skills? Are you operating on up-to-date software? In other words, and the final one is your social capital. Do you build a network, and have you built a reputation? So there are 2 things you need to build: a network and a reputation, because people then can refer you, people then can open doors for you, and a lot can go on for you. So there's 7 ways that have been cited here on how to improve your career capital. And these are seven things that people should be doing, and I want to go through them in this closing point. First one is to have a craftsman's mindset as opposed to a passion-seeking mindset. The first one, what they mean is that the biggest fallacy that is being promoted in careers today is that your occupational happiness comes from finding a job that corresponds with some pre-existing passion. Okay, that's what they pointed out, that in you is some pre-existing passion that speaks to a job. And this won't sit well with certain people because they'll say, you're making broad statements. But the reality is there actually is a lot of evidence to support that. We have to be very careful about the pursuit of pre-existing passions and actually look into areas of talent and competence. Those are areas where we are highly likely, by the way, to do a lot of good. It's just sometimes we need to reorient our competence into impact. Maybe look at what you're very competent in and then ask yourself who needs it and why they need it. One of the easiest ways, and I'll tell you from my experience, one of the easiest ways to become passionate about something is to listen to the people who benefit from the thing you're good at. If you listen to people who are passionately beneficial, who are passionate about the benefit they derive from the thing that you're very good at, all of a sudden you will start to be passionate about it. So if you can sit down and listen to it from a needs perspective. So this is what he means by a craftsman's mindset. A passion seeker's mindset approaches the world by saying, what can the world give me? How can I derive? What can I take? While a craftsman mindset says, what can I offer the world? Who needs me? What pain can I resolve? So when you start thinking about other people and have that craftsman mindset, that's the first step you're looking at. So switching from what gives me more joy to where can I make the most impact with the skill set that I have, that is the first step that I think a lot of people need to start switching to. The second one is know what's really valuable in your field. So don't devote a lot of time to a path that will never lead to success. Try and make sure that if you're having a hard time figuring out what are the actual skills that are valuable and most paid for and needed, and problem solve a lot in your field, perhaps what you want to do is pinpoint a few people who are really good at what they do. Okay, pinpoint a few people who are really good at what they do, learn from them, and then start to look at who's very good and who are the people who are not very good. Differentiate between the two, and you'll start to see what the actual skill sets that are valued. Stretch yourself. Deliberate practice is a very important thing. Now, deliberate practice is not practicing over and over to do something that you're good at. Deliberate practice is always saying, this thing I'm good at, how can I do it better? How can I always do it better? There was an interview with Akon where he was talking about a recording session with Michael Jackson. And Michael Jackson and him were recording Hold My Hand. And when they were recording it, Akon said he thought it was brilliant. Michael Jackson turned around to him and said, nah, man, it can be better. We can do it better. Michael Jackson had a better mindset. Akon thought this was fantastic. We can't do better. But Michael Jackson always believed he could stretch himself. So deliberate practice is the ability to never get comfortable with how well you can do something. If you can run 100 meters in 9 seconds, then you can push it to 8.8. Always trying to push yourself to go beyond what your previous best is. Knowing things doing things. So in other words, the problem with deliberate practice, which Godfrey Colvin says in his book, Talent is Overrated, is that doing things we are good at feels enjoyable. But that's the opposite of deliberate practice. So you have to push past your natural inclination to only do what's enjoyable. So you have to look at your work and say, how do I constantly push past myself? And also the fourth thing that we can do is seek feedback. It's the honest and sometimes harsh feedback where we learn to retrain our focus and continue to make progress. So consistently choose projects that are in a collaborative and in a community environment so that you often have to get feedback. So always try and push yourself to get feedback. Minimize time wasting. In other words, this is how you use your time. Restrict your allotment of time from the hard to change commitments that don't make any impact on how much better you're getting at your work, and set goals to look at things that will improve you. Focus on things you will be judged on. Okay, people with big stores of career capital, they reject a lot of issues. They reject a lot of opportunities that could possibly waste their time and are not connected to what they're trying to achieve, and they avoid distraction. So people with career capital don't do a lot of things, but they choose to do something with intensity and intentionality over a period of time. So you must be a mix of intense and intentional in order to get there. I also had to learn that the hard way. Never work without a goal, but make sure that the goal you have in your career is suitable to where you are in your career. So if you're trying to work generally, you're just going to waste a lot of energy. But he says leverage what you call little bets, little projects that are small enough to be completed in less than a month, but force you to create something new. For example, acquiring a new skill, producing a new product, and they give you a concrete product that can garner feedback. So this is something you also have to focus on. And then finally, having the patience over payoff mentality. In other words, sowing mentality and not reaping. What you put in, focusing on that more. If you stay with something long enough, one day you would have done it for 4 years. And anybody who sticks with something for 4 years generally becomes very good at it. Now, quickly, 5 things that we can do as well in order to improve our career capital is conduct productive networking in the workplace and also in your industry. Whenever I'm not saying become the office chakolwa. No, that's not what I'm saying. But if they are hangouts with people, try and talk to them. Network, socialize. You need to do that. That is where you actually build some career capital. Going to workplace events, that's where you build it as well. Some of these conferences in your industry, you build it there as well. Continuous training and development is extremely important. An application of your learning in innovative ways. Don't just go for trainings, for certificates, but actually make sure there's an application at the end of your training. Actively seek out mentors and other networks within the organization, and focus on building a reputation of being reliable, motivated, determined, and adaptable. So your reputation also needs to precede you in those fields as well. And that is what we talk about when we talk about trying to build career capital. Basically, Steve Martin did say, be so good that they cannot ignore you. That is the name of the book. Don't focus on trying to force people to pay you well. Be so good that they have to seek you out and they cannot ignore you. That is the important way to do that. Now, there is inflation around. Interest rates are going to rise. So many things are out of your control. But everything I talked about here are things in your control where you can actually create a lot of force and momentum behind your income generating capacity to then overpower the environmental factors. You cannot complain inflation into slowing down. You cannot complain interest rates into coming down. You cannot complain the economy into growing faster. You can't complain these things into existence. But you can work so hard and you can be so good that nobody can ignore you, that your income generating capacity supersedes the impacts of all of those. And when your income outpaces the environmental cost factors or the negative factors, you have excess. Then you can learn to manage your money. And then that excess, when it's managed well, then gets allocated well into multiplication. Then it is structured well into maintenance. And that is today's financial conversation. Thank you so much for everybody who has joined us today in our conversation. That is a deep convo on building career capital. See us tomorrow as we continue on our series on risk. Remember, we'll be talking more about risk and diversification tomorrow in the investment side of Wealth Wednesday. Have a wonderful and blessed day. Thank you for joining us.